Hi everyone, welcome back to my YouTube channel. This is Raz, and in this video, we will discuss about charitable contributions as an itemized deduction against our gross income. If you're ready, let's start. So what is a charitable contribution? Charitable contributions are donations, gifts, or any contribution made by the taxpayer out of his charity or love. These contributions are voluntarily made to qualified organization. So any one of us can give something to someone or to organizations in which we feel that we want to help them. We give them donations, we give gifts out of charity and out of love. These contributions are also or may also be deducted from our gross income provided that these contributions qualify to the pertinent provision or rules of our tax code. So since the nature of charitable contribution is that they are not necessarily connected with the taxpayer's trade, business, or practice of profession, there are rules that needed to be followed so that these deductions or these charitable contributions may be deducted from our gross income. Charitable and other contributions and donations may be deductible from gross income in full or subject to limitations. So as I have said, we must follow these rules because as we know, the general rule in claiming expenses or deductions from the gross income is that these must be necessary, ordinary, and substantiated. So since charitable contributions are not really ordinary and necessary for business since they are not part of the operation, our tax code has to be more strict when it comes to charitable contributions. Okay? So there are charitable contributions which could be deducted in full or could be subject to limitations. So we'll discuss those two things in this video, and I will show you an illustration on how to compute for the limitations, especially for those charitable contributions which do not necessarily qualify for deduction in full. Okay? So first, those contributions which are fully deductible from the gross income of the taxpayer, whether individual or corporate taxpayers. So it is said that charitable contributions are deductible in full under the following conditions. It's number one, as a condition, donations made to the government of the Philippines or any of its political subdivisions or agencies, including fully owned government corporations, exclusively to be used in undertaking priority activities in NEDA's annual priority plan. So, donations made to the government of the Philippines or any of its agencies or political subdivisions. When you say agencies, this could be Department of Education or Department of Health. When we say political subdivisions, this could be the national government or the local government or the barangays. And take note, this donation should be used in undertaking priority activities which must be in the National Economic and Development Authority's annual priority plan. So what are these priority activities? So these priority activities could be in education and human settlements, and then those donation made to health and science and culture, and those donations made to youth in sports development and economic development. So any donation to the government for these priority activities could be deducted in full. Okay? So, for example, if you want to donate to Department of Health or to government hospitals for the purchase of personal protective equipment, PPEs, that could be deducted in full. Any donation made to the government or to any of its agencies or political subdivisions which are not in accordance with the above, the six of the above, shall be subject to limitations. Okay, so again, any donation even made to the government but which are not used for those priority activities, those could not be deducted in full. Okay, so it can only be deducted in full once those donations are made for these 6 priority activities. Okay? Another contribution which is deductible in full are donations made to foreign institutions or international organizations are fully deductible. So if you want to donate to Red Cross, that could be deducted in full. And also donations to accredited non-government organization or NGOs organized and operated exclusively for scientific, youth and sports development, research, health and social welfare, educational, cultural and charitable purposes, and character building, and any combination thereof are also deductible in full. So for example, if you donate to Gawad Kalinga or GK, to Bantay Bata 163, and to Red Cross, and any other those accredited non-government organizations which are solely and exclusively operated for these 8 areas, that donation can also be deducted from the taxpayer's gross income in full. Okay? Provided that no part of net income of these NGOs inures the benefit of any private individual, and not more than 30% of such contributions are utilized for administrative purposes. So, these donations made to NGOs are only qualified for deduction in full once these NGOs are solely for non-profit only. If these NGOs are performing or doing business and its income benefits any private individual, like in form of income distribution such as dividend, so that could invalidate the donation as deduction in full from the taxpayer's gross income. Also, the contribution should be solely and exclusively used for these 8 things or areas. If a part of that contribution is used for administrative purposes, or let's say for the payment of the NGO's rent or salaries of its employees, so that could also invalidate the donation as deduction in full. Take note that if a portion of such contribution is used for admin purposes, such proportion should not exceed 30% of the total contribution. For example, if you donated 1 million pesos to Red Cross, and then that 1 million should be exclusively used for its operation of the Red Cross. But if some portion of that 1 million is used for the admin purposes like the payment of utilities or the rent or the salaries, that proportion should not exceed 30% of the entire contribution. So that is 300,000, meaning the portion which are used for the payment of salaries, rent, utilities, and so on could not exceed 300,000. That is 30% of the entire amount donated. Okay? Otherwise, the entire amount could not be deducted in full. It could be subject to limitations. Okay? So how would the BAR know that there is nothing really used for operation, or the 30% threshold is not breached? So actually, every taxpayer making contributions are required to submit certificates or documents evidencing that he really made such contributions with the consent and acceptance of the NGOs. So those are the 3 donations which are deductible in full. Number 1, donations to the Philippine Government for priority programs. Number 2, donations to foreign institutions or international organizations. And number 3, donations to accredited non-government organizations. So these are the 3 donations which can be deducted in full from the gross income of the taxpayer. Well, aside from that, we also have contributions which are non-deductible in full. These contributions are subject to limits. So contributions are deductible subject to limitations under the following conditions. Number 1, donations to the government of the Philippines or any of its agencies or political subdivisions including fully owned government corporations, to be used in a non-priority activities, but exclusively used for public purpose. Again, if donations are made to not to government, but these donations are used for non-priority programs or activities, remember the six things I have mentioned a while ago, this donation could be subject to limitations. However, provided this donation should be used exclusively for public purpose. So what are those limitations? For corporation, the limit is 5% of the taxable income from the trade or practice of profession before the deduction for charitable contributions. While for individuals, it's 10% of the taxable income from the trade or practice of profession before the deduction from charitable contributions. So we will illustrate what is this 5% and 10%. Again, take note, it's 5% of the taxable income before deducting the charitable contributions, or 10% of the taxable income before deducting charitable contributions. It's 5 or 10. 5 for corporation and 10 for individual taxpayers. Okay? So let's have these comparative rules. So for individual taxpayers, we have gross income less deductions before contributions. When we say deductions, these are the itemized deductions, the expenses, interest, taxes, losses, bad debts, depreciation, which we have already discussed in our other videos in this YouTube channel. So if you haven't watched those videos, please watch those videos so you will know what are the rules for those deductions as well. So after we deduct deductions from the gross income, we would get net income before contributions. When we say net income before contributions, this is the income before we deduct charitable contributions. And then from that, we will multiply by 10%. So 10% is the limit for individual taxpayers. So we will multiply the net income before deducting contributions by 10% to get the limit or the threshold. And once we get the threshold, we will compare this amount with the actual amount, whichever is lower. Okay? If the threshold is lower, then we will use the threshold. If the actual amount is lower than the threshold, then of course, we will use the actual amount to be deducted from the net income before contributions. So again, choose whichever is lower. For corporations or corporate taxpayers, again, we will follow the same process. We have gross income less deductions before deducting any contributions. So we would get net income before contributions. And we will multiply that by 5%. The 5% is the limit for corporations. So the threshold, so after that, we will get the threshold. This threshold or limit will be compared to the actual amount and we will choose whichever is lower. Okay? So let's have an illustration with a taxpayer being a corporate taxpayer. ABC Corporation had a gross income from business of 1 million and business expenses of 400,000 in contributions deductible but subject to limitation to XYZ Association. So this is subject to limit because maybe ABC or the contribution does not qualify for those priority programs. And then the amount of contribution was 10,000 and to JKL Association we have 40,000 pesos. So again, these two contributions, the 10 and the 40,000, are contributions which are subject to limit. So the first step here is to compute first how much is the net income before deducting contributions. And remember, for corporate taxpayer, the limit is 5%. So we are asked to compute the taxable income of ABC Corporation. So after deducting everything. Okay? So our solution would be, we have gross income less business expenses excluding contributions. Again, these expenses do not include the charitable contribution. So we will get the net income before contributions of 600,000. Then we will deduct the charitable contributions. But again, before we can deduct the charitable contributions, we will first compare the actual amount to the threshold or limit. The actual amount was to XYZ Association, we have 10,000, while to JKL Association, we have 40,000 pesos. The total actual amount was 50,000 pesos. Okay? So, after that, we will compare with the limit. This limit is 600,000. This is based on the net income before the charitable contribution, okay, then multiplied by the 5%. That is the limit for corporate taxpayers. So we will get 30,000 pesos. So we will compare the total actual amount versus the limit, and we will choose whichever is lower. So in this case, since the limit is lower, then we will deduct the lower amount from the net taxable income before deducting contributions. If, for example, if the actual amount is lower, then we will use the actual amount. So, the net taxable income of ABC Corporation is 570,000 pesos. That's it. That's how you compute charitable contributions. Okay? So again, when we say net taxable income before contribution, that means the gross income after you deducted the itemized deductions, the other itemized deductions. Remember, we have 10 itemized deduction. So you just deduct the 9 of them, excluding the charitable contributions. So you will deduct expenses, interest, taxes, losses, bad debts, depreciation, depletion, pension trust, and research and development. So excluding again the charitable contributions to get the net taxable income before contributions. Then after that, you will multiply that with 5% or 10% for individual taxpayers to get that threshold. Okay? Let's have another illustration for individual taxpayers. Juan de la Cruz, married, had a gross income from business of 800,000 pesos and business expenses of 600,000 pesos. He made contributions to the city government of Cebu for youth and sports development. Take note of this. This is a priority program. Therefore, this is deductible in full. And of course, to his barangay for road widening. So, this other one, donation to the barangay, is not a priority program of the government. So therefore, this 25,000 donation or contribution should be subject to the limit of 10%, while the 12,000 donation to the city government of Cebu will be deducted in full. So we are asked to compute the taxable income of Juan de la Cruz. So to do that, we will compute or solve for the net taxable income before deducting contributions. So we have here gross income 800,000 less business expenses excluding contributions of 600,000. So we have net taxable income before contributions of 200,000 pesos. Then we will deduct the charitable contributions, and that is, we have two. So deductible in full, that is 12,000 pesos. So we will not touch that amount because that amount is already deductible in full. While the other one, the subject to limit, which is 25,000 pesos. And we will compare that 25,000 with the 10% of the 200,000. So take note of this. This is the net income before contribution. We will multiply with 10% the limit. So we will get 20. Okay? Now we will compare 25 and 20, whichever is lower. And since the limit is lower, we will use the limit. Okay? So if the actual amount is lower, we will use the lower amount, the actual amount. If the limit is lower than the actual amount, then we will use the limit, the lower amount. So we have here the charitable contribution deductible in full, which is 12,000, and charitable contributions, which is subject to limit, that is 20,000 pesos, a total of 32,000 pesos. So the net taxable income of Juan is 168,000 pesos. That's it. That's basically how you compute charitable contributions as a deduction from the gross income of the taxpayer. So now let's go to the substantiation requirements. As I have said, there is a need to substantiate, to supply evidence, to provide evidence that really those contributions actually happened. Because again, charitable contributions are not ordinary and necessary in the business. Therefore, the tax code should be stricter on that part, since anyone could just say, oh, I give something, I contributed something, to deduct an amount from their gross income, and that could be somehow used as a scheme or a way, a means to evade or avoid the payment of taxes. So if anyone would just be allowed to donate and give contributions without substantiation, so that could be an escape from the payment of taxes. Donors who donated to qualified donor institutions duly accredited by the Philippine Council for Non-Government Organization Certification Incorporated or the PCNC are exempt from donors tax provided that they comply with certain conditions. So what are these certain conditions? First, providing a certificate of donation, okay? And that should be accepted by the donee where donation was made. Okay, so in addition to that, donors may avail of full deduction of their donation to these accredited institutions. Under the Revenue Memorandum Circular 86-2014, it clarifies the substantiation requirements needed to justify claims of charitable contributions as deductions to the gross income of the taxpayer. Taxpayer claiming donations as deductions from gross income must present to the BR the certificate of donation, indicating the actual receipt, the date of donation, and the amount of cash or the acquisition cost of the property if it's in property. So again, the BR is strict to that, and there must be an actual donation which is evidenced by a certificate of donation, and this should be duly notarized by public attorney, and that should indicate there's the actual receipt, there's an acceptance, and the date of donation, and the actual amount of cash donated. Also, according to Benihan to Recover as One Act, on April 7, 2020, the Bureau of Internal Revenue released Revenue Regulations RR 9-2020, granting further benefits from donations during the enhanced community quarantine in relation to the National Internal Revenue Code of 1997 as amended. So the following donations or gifts made when given for the sole and exclusive purpose of combating COVID-19 during the period of the state of national emergency under RA number 11469, that is the Benihan to Heal as One Act. So these donations shall be fully deductible against the gross income of the donor corporation or donor individual. So cash donations and donations of all critical and needed healthcare equipment or supplies, relief goods such as but not limited to food packs, rice, canned goods, noodles, etc., and water, and use of property, whether real or personal, like shuttle services or use of lots and buildings for as a quarantine area. So again, those donations are deductible in full amount. To be fully deductible and allowed as expense against the gross income of the donor corporation and or donor individual, said exempt donation or gifts shall be made to any of the following donees and shall be supported of the following documents. Again, there is a requirement to be fully deductible from the gross income. Those donations should be made to the following donees and should be supported with the corresponding documents. So number 1, to the national government or any entity created by any of its agencies, including public hospitals, which is not conducted for profit, or to any political subdivision of the said government, including fully owned government corporations. So any donation to the government to combat COVID-19 is deductible in full, and you need to present a deed of donation. A deed of donation is a formal instrument which indicates the donation, and also donation to accredited non-stock, non-profit, educational, and or charitable, religious, cultural, or social welfare corporation, institution, foundation, non-government organization, trust or philanthropic organization, and or research institution organization. In the donor corporation or individual should only present certificate of donation, that is PR form number 2322. Again, those are the requirements to be deducted in full, okay, from the gross income of the taxpayer to national government or to NGOs which are accredited for their purpose. And to government, and if you're going to donate for government, you only need deed of donation. If you donate to accredited NGOs, you need to have certificate of donation, that is under bear form number 2322. So those are the rules and tax treatment for the charitable contributions as an itemized deduction against the gross income of the taxpayer. I hope you learned a lot from this video. If you like this video, give me a thumbs up. And if you're new to this channel, please subscribe and click the notification bell so you'll be notified whenever I will upload new videos. And thank you so much for watching. Bye bye.